Let's get to the floor show. With $5 trillion in assets under management, State Street Investment Management Chief Investment Strategist Michael Arone is here on how he is doing that. Proceed with caution?
Well, I do think that one day doesn't make a trend, Liz. And so from my perspective, the foundation for this rally remains strong. Fiscal stimulus, monetary stimulus, great earnings, Pepsi, Delta today, outstanding. But I do think the risks are skewed to the downside. The S&P is up close to 40% since the April lows. And the biggest drawdown over that time period, just 2.65%. So I do think the risks are skewed to the downside, and you mentioned two of them in your opening.
Yeah, I mean, you look at that divot there right around April when the Liberation Day tariffs were announced. Since then, as you say, a huge jump. And year to date, you've got the S&P up 14%. So when you're looking at the juiciest opportunities in the markets, are you already in them, or are there things that you're adding that are fresh trades?
Well, I think from my perspective, the technology trade continues to have momentum. This is where the earnings growth is. So as you know, and you highlighted, we're about to enter the third quarter earnings season. And I think technology is going to deliver, again, outstanding earnings growth. They're going to deliver on the AI promise. So that's going to continue to be a key. Also, financials, I think, will also kick off the unofficial start to earnings season next week. And I expect them to deliver solid results.
Financials. Yeah. Haven't gotten a lot of oxygen lately, but we've seen Jamie Dimon of JP Morgan make some comments where he said he's much more worried about, who knows, frothiness in the markets. He's always worried.
He's always worried.
His constant state is Spilches. That's real concern here and anxiety. But I mean, you look at how well, say, for example, Goldman Sachs has done, one of the leaders in the Dow year to date. So what is it about the financials, and do you like the bigger ones or maybe some of the regionals?
So we like both the bigger banks and the regionals. So we like the regionals because we think regulation's going to be falling and M&A activity is going to tick up, and regional banks may benefit from that. On the flip side, the bigger banks, they are in a very profitable position. They deliver a lot of shareholder equity to investors, both through dividends and buybacks. Lower regulation should help them. And by the way, there's this really peculiar thing going on where consumer sentiment surveys suggest fear, like Jamie Dimon. But what happens in reality in the hard data is consumers continue to spend. And that's what we're likely to see. So we're going to see consumer sentiment data on Friday, and it'll likely show, and this is from the University of Michigan, I bet it continues to show weakness. But consumers continue to spend, Liz, and I think that that's what the bank earnings will reflect.
Yeah, those sentiment reports are what they call soft data, not hard government data. And the soft data lately have shown exactly what you say. That said, though, when you talk about consumer spending, much of that spending is being held up almost like a one-legged stool from the high-end consumer. I'm surprised that I'm not hearing you say that, you're not recommending a more active push for defensive sectors, knowing that.
Well, I think one of the things is that's true. About 10% of the top income earners now are responsible for 50% of the spending. That's skewed bigger than any time in history. But there's some good news coming. So in the tax refund season early next year, kind of in that February to May timeframe, incrementally, you'll see $150 billion more in tax refunds. And that tends to go a bit more broadly to everyone. And that tends to get spent. So I think that that'll be beneficial. Now, there is one defensive sector we do think is interesting, and that is healthcare. And so healthcare has been a real dog in the last 10 years. 8 out of the last 10 years, it's been an underperformer. 2018, 2022 are the only years it's done well. But we think there's an opportunity here as rates fall, lower regulation. The One Big Beautiful Bill will help in terms of expensing immediately the R&D. And of course, the Trump administration's desire to get more pharmaceutical kind of development back here in the United States.
Well, and Trump RX rolling out.
RX.
We are waiting to see less expensive drugs. It's just interesting to see if the R&D gets colder versus hotter, as you anticipate. It's good to see you, Michael. Thank you so much.
Thanks, Liz.